Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Thursday, the 20th of January. And quite a few repeats, which is normally a good thing. Here we have 88 Energy with the V-shaped bull flag, which I call, I don't think anybody else calls them that, but V-shaped bull flag bouncing off the 50-day moving average and then breaking the initial high of January, 1.85. Above that, we were looking for 3.5 pence or 3.4 pence, and we're still looking for that, and hopefully we'll get that as soon as the end of next month. Lithium looking to be the flavor of the month or the week. Here we've got Atlantic Lithium, hopefully when I can get the right chart up. And here we can see that the shares have managed to break to new higher ground. Again, I suppose another V-shaped bull flag breakout through the initial December resistance, 29.5 pence. Above that, we're looking for as high as the top of that one-year trend channel at 40 pence, and possibly much more, given the strong build-up that we're seeing for this particular stock. Tin, I think, and nickel at record highs at the moment, apparently. Afrotin benefiting from that. V-shaped bull flag breakout, breaking the initial January resistance to 6.1 pence, and we're looking for up to 8 pence at the top of that rising February trend channel. Nice sort of smooth progression for the shares at the moment. Stock which was rather surprising in returning around so sharply, but one should be grateful for these things in the current market. Alba Mineral Resources, very strong rebound there, holding that neckline and breaking above it at 0.18. We hit the sort of the low 20s, which we were looking for. Now an end-of-day close above 0.22, and the 200-day moving average could take us to that rather ambitious target that we had before of 0.32, maybe by the end of next month. But that looks like a pretty strong turnaround, obviously, in anyone's books, and that's backed by that bullish divergence line, which signaled that we could be turning around 0.1, 0.14, 0.15. But obviously at that point, one wouldn't have expected such a sharp turnaround, but that's what bullish divergence lines do. On to another metals play. Here we've got European metals, and gapping through the 200-day moving average, which is normally quite an event. If we can close above that old November peak as well, the 200-day line is at, at 78 pence, but we could close above that November peak at 83 pence by the end of the week. This would be looking like a pretty strong situation. Overall, the price channel here, which I'm going to draw in a second, is basically from the early part of last year. So the top upper parallel there, looking towards £1.20, and obviously retesting that August resistance area as well. But ideally, there's no end-of-day close back below the floor of the gap at 77 pence ahead of a potential move to the upside. Onto a stock which doesn't get much airtime anywhere really, which I'll try and get up in a moment. We've got a stock which is, let's get the right code, E Energy, and here you can see that we've got this bull flag here above the 50-day moving average at 13 pence, so the eyesight's going, and above 13 pence in the 50-day line, looking for, I suppose, up to the low 20s, maybe July resistance, 21, 22 pence over the next few weeks. But let's see if this bull flag above the 50-day line, after the extended bear run that the shares have had, will actually deliver to the upside, or the upside argument. If you're cautious, maybe an end-of-day close above 17 pence, and the initial January resistance could be enough to do the trick. On to Helium One, which is one of our repeats. Here you can see that we're still every day sort of a bit more on the upside, sort of a very steep turnaround, a bit like Alba was actually. But initial target here, the 200-day line, 13.8 pence. The best case scenario target by the end of next month, up to 20 pence, which, given the way that the shares are moving, could actually be achievable. Only well below the old gap down at 10 pence, really delaying the upside scenario, and ideally we don't even fall back below 11.5. On to Harvest Minerals, another stock which has been playing the recovery game of late. Bull flag at the moment between 5.25 and 6.75. Looking for and assuming that we will have a breakout, so not only hit 7 pence at the top of that channel, but also even go for an upgraded target here as high as 8 pence which is a February resistance line projection from last year. The upside very much in place while we're above 5.25 or 5 even as a stop loss. Oxford is next, and here we're sort of jumping the gun a bit, assuming that the recent consolidation, sideways consolidation since December, will result in a break of the resistance line there from back in June at 2.8 pence. Above that, looking to 5.5 pence over maybe a 2 to 3 month time frame, if we have finally bottomed out, which is it looks as though the shares finally have. Onto Rarebold or Rebold. Here we've got a situation where we've had a decent turnaround, breaking or gapping up through the initial January resistance at 0.2. Above that, we're looking actually now towards the 200-day moving average at 0.36, and maybe by the end of March up towards the 40s there for Rarebold Resources, looking pretty good after that unfilled gap to the upside and the sideways shuffle along the or just above the 50-day moving average. Just 3 stocks to go now. First is Tirupati, which came up with some decent news today, gapping up after or above the 50-day moving average at 75 pence. While we're above that, looking for at least a retest of January resistance at 94. Big picture target maybe over the next couple of months as high as £1.10 at the top of that broadening October triangle on the daily chart. Onto Triad, which I don't look at very much, but here it is today. We got good progress in the near term. We bounced off the floor of the rising trend channel, which seems to be running through around the £1.23 area. But breaking recent resistance in the 140 area suggests that we could see up to £2.10, £2.20 at the top of last year's trend channel, and that could be seen as soon as the end of February. So pretty good momentum for that situation. Onto a stock which has had its sort of knockers, I suppose, over the recent past, but Wildcat looks like it is rehabilitating itself. We've got a rising 50-day line, but bear traps below that, and pushing through the 200-day line at 2.1 pence. Minimum now should be up to 3.25, which was November resistance. Best case scenario target, if you're a Wildcat fan, would be up to 5 or 6 pence, which is that March resistance line projection, about 6 to 6.5 pence on a maybe 2 to 3 month view, something like that. So that could surprise the doubters of that particular situation. That's it for me today. More updates tomorrow.